Hello, I'm Matt Mark with the World Gold Council, and thank you for joining us in the latest installment of our Strategic Edge videos. We're using these videos to bring you some of the brightest minds across the investment management industry, and today we're joined by Andrew McCollum, who's the head of the Global Investment Management Practice at Coalition Greenwich, formerly known as Greenwich Associates. Andrew, thanks for joining us today.
It's nice to be here with you, Matt. Appreciate the opportunity.
Let's dive right in, and in terms of introducing the work that your global team does, you conducted a global study last year during the teeth of the pandemic, which really delved into the asset allocation preferences and the trends you're seeing across global institutional investors. Talk to us about that.
Yeah, sure. So in terms of the work that we do at Coalition Greenwich, we really focus on understanding institutional investors' sentiment and intentions relating to their portfolios. And to that end, we conduct literally thousands of interviews every year with large institutional investors around the world. Given the uncertainties that investors are facing these days, we thought it was the right time to talk to investors about their planned investment strategies as the global economy emerges from COVID. So we were certainly delighted to partner with you, Matt, and your colleagues at the World Gold Council to really understand how institutional portfolios are shifting, what's driving those shifts, and what's keeping them awake at night, among other topics. So ultimately, we talked to 500 investors around the world about their allocations, investment concerns, and areas of focus for their portfolios.
Something that ties our organizations together is really trying to understand what drives people to make portfolio decisions. And we had a lot of conversations around this. This study was done during the teeth of the pandemic over the course of the end of last year, and you finalized your findings at the early part of this year. I think one thing that stood out for me was investing for the new normal. And to your point, a lot of concerns around what could be happening, predominantly inflation. How do you think the findings of what you heard last year, how did it play out versus the beginning of this year and what we've seen in 2021?
Yeah, I mean, this is an unusual and uncertain investment environment for institutional investors. And investors in the first half of 2021, as we were conducting this research, really do seem to be making moves in their portfolios to prepare for a post-COVID world, whatever they think that means. And so they told us that decisions about short and long-term portfolio allocations are driven by two primary concerns, right? So the first is the need to meet return objectives in a prolonged low-yield environment like we find ourselves in now. And the second thing was the need to rebalance portfolios after a historic run-up in equity valuations. But after those sort of, I'll call them primary considerations, in the near term, there was a heightened focus on liquidity. But in the longer term, they seem to be quite focused on interest rate projections, which I think reflects concerns both about market conditions and the threat of inflation. And as you noted, concerns about inflation has certainly increased these past few months. But in terms of what all this means for allocations, at a 10,000-foot view level, we've seen real interest in products that provide protection from the storm or the uncertainty. One of those categories that provides that protection is gold, but we've also seen interest in other hedging products or inflation protection categories, things like real estate or infrastructure. We also continue to see a surprising amount of risk-seeking activity on the other side of the coin, right? With rates at such low levels, equities continue to be appealing, and we also continue to see flows into private markets, in particular private equity and private debt. What's kind of interesting to me in all of these changes is just how different this feels from the years following the global financial crisis, so 2008, 2009, 2010, and so forth, where we really saw a suspension of hiring activity. That's not what we're seeing now. Today, investors are really taking action to prepare for that future state.
And that's a really interesting comparison to what we saw just about a little over a decade ago in terms of Fed policy response, the thoughts of inflation, hiring trends. We just got the non-farm payroll report today, and it blew away expectations. And it just seems finally that the market is now beginning to discuss the potential for the Fed to taper. But you noted a definitive shift towards gold, and I guess the broader category is alternatives coming out of the document and then the study. What does that say about the role of these alternatives, specifically gold, when most of the considerations are to generate returns?
Yeah, well, alternatives is playing a much bigger role in institutional portfolios. This has been a long-term trend. But gold specifically is playing a bigger role in addressing several of the concerns that investors have about this current environment. Maybe I can just set the stage a little bit about gold usage, though. From the study that we did, about 1 in 5 institutions currently have a specific allocation to gold in their portfolio, so about 20%. This does vary quite a bit by geography. So in North America, it was 12% of investors that had a specific allocation to gold. In Europe, it was quite a bit higher, 29%, which was about about 2.5 times the prevalence in North America. That being said, in North America, those institutions that are using gold have much higher allocations than in Europe. So it was about 7% versus 4%. So, again, 20% using gold. Among those that are using gold in their portfolios, 38% plan to increase their allocations versus only 8% that plan to decrease. Among that other group, though, right, the investors that don't currently have an allocation to gold but have thought about it, 4 in 10 told us that they plan to make an allocation in the next 3 years. So, I think that the picture I'm painting here is that gold investment or gold use is clearly on the ascent. And according to the investors we talked to, this expansion of the use of gold isn't just due to one factor, right? It's not just about inflation, though inflation is a part of this story. What's interesting to me is that the diversification benefit that gold brings to a portfolio was actually mentioned more frequently than inflation hedging. And then also, lots of investors also look to gold for long-term risk-adjusted return enhancement. There's this great statistic, and it's a World Gold Council statistic, so Matt, sorry if I'm stealing your thunder here, but we thought it was such a good statistic that we put it on the cover of the paper that we wrote. And it says that in years when inflation was higher than 3%, gold price increased by 15% per year on average. So, I think the takeaway from all of this is that gold really does seem to serve multiple constructive roles in a portfolio. And in my opinion, as long as there's uncertainty in the markets, which, for the foreseeable future is likely to be the case, I would think it's, gold is going to grow its presence as a core strategic asset in institutional portfolios.
Well, I don't personally have an issue with you stealing any thunder because that's one of the data points we bring out when we talk to investors, and it dovetails exactly into the findings of the portfolio. Investing for the new normal and having these portfolio considerations, be it return generation, correlation, or even liquidity, which I know the study pointed to a big need for liquidity coming out of what we saw in March of 2020. Gold and the concept of alternatives fits that bill quite nicely. So let's wrap this up and talk about next steps and discuss the best way for investors to use this study. We should mention the name of the report is Rethink, Rebalance, Reset, Institutional Portfolio Strategies for the Post-Pandemic Period. I know it's available on the Coalition Greenwich website. How could investors use this study and, say, our collective resources to build better portfolios?
Well, I think the study does a nice job of helping investors with both the what and the why. So with regard to the what, we interviewed 500 investors. So the data can really help investors to compare and contrast their allocations to peers. And they can do this by country, by investor type, by portfolio size. I'm sure World Gold Council would be happy to share some of that information. So that's really the what. But equally importantly, maybe even more importantly, I think the study also helps investors to understand the drivers behind peers' allocation decisions. So why are people doing what they're doing in their portfolio? And I think that's really critical to understand as well. So that's kind of where I would point people to in terms of using this study to the benefit of their allocations.
Great stuff. And we're going to leave it there. Andrew McCollum, Coalition Greenwich, thanks for joining us today.
Thanks for having me, Matt.